Let's welcome on board Mahantesh Sabarad as well and find out what he's making of the market right now. Mahantesh, hi, afternoon. Let's just pick up on the point that our chartist as well was making on pharma. Good numbers from Divi's, Glenmark's guidance has been good. Seems like a revival in the pharma story is at play.
Actually, yes. You see, the US economy is now stabilizing, and many of these Indian pharma companies have large exposure to the US market. We've had pressures coming from the US side for many of the pharma companies, particularly on the pricing front. That there was price compression, and even in terms of volume growth. Now that the US economy is stabilizing, we should be seeing many of these pharma companies now looking at better growth ahead. Not just that, Indian pharma industry has been evolving quite well. The growth rates are unlike the, let's say, the FMCG side kind of market growth. The pharma growth has been somewhere in the high single digits to early double digits in terms of growth rates. So that augurs really well for most of the pharma companies. So I would reckon that things are looking quite conducive for the pharma companies' growth ahead. Pricing should also be better.
The take on the pharma sector, but let me take it across to Shrishti. She's joining us with a roundup of how the performance has been, because more or less the commentary has been on the positive side, right, Shrishti?
Well, yes, a lot of counters in the pharma space are buzzing on the back of the earnings. Let's start with Divi's Lab. Good set of numbers where we have seen after 5 consecutive quarters, the company has once again clawed back to the 30% margin, even above that in the quarter gone by. And not just that, the management is sounding very optimistic of the growth outlook ahead. For FY25, they are expecting a double-digit growth, as well as all the segments, especially the custom synthesis business is seeing a lot of traction is what they are saying. And even the Kakinada plant, which is expected to be operational in the third quarter of this financial year, is expected to come out with incremental revenue from that front. If we talk about Torrent Pharma, then definitely a good set of numbers, and on a management commentary, they are expecting a margin to see an improvement of 50 to 100 basis point in FY25, and the margin increase to be aided by increase in the branded business, operating leverage, and some of the new product launches that the company is planning for the US markets. When it comes to Glenmark Pharma, then definitely a good set of numbers, but the EBITDA margin target is close to 19% for the full year of FY25. Other than that, the R&D cost for FY25 is expected to be 7 to 7.25% of the total revenue, and some of their key products are seen to be gaining market in their markets as well. If we talk about Aurobindo Pharma, then on the flip side, that stock is seen to be under pressure, because just ahead of the earnings, we have seen a good run-up, but the earnings were not that bad. The operational set of numbers were quite okay, but if we talk about the management outlook, then they are expecting FY25 to be a muted year in terms of the growth, because they are saying that there are no blockbuster launches that are planned, and some of the blockbuster launches are planned in FY26 rather. And not just that, onto the OAI that has been received to the one of their key manufacturing sites, that is Eugia Manufacturing 3 plant, then the company is saying that more than 20 plus filings could get impacted because of that, but as a substitute they will be substituting the upcoming filings to the Vizag plant. So those were the updates coming in from Aurobindo Pharma, and hence the stock is under pressure today.
Okay, that's the take coming in on all the buzzers from within the pharma pack. But just look at HDFC Bank. While, of course, the key pressure point today has been Reliance, but some of the private banking names are seeing a cool off, and I guess that is what's also weighing heavy on the index. ICICI Bank now meagerly holding out in the green. Kotak as well has drifted lower. And yes, HDFC Bank is the one which is drastically lower from its session highs. Kunal, let's get a reading on both ICICI Bank as well as HDFC Bank.
So I think HDFC Bank is interesting because the stock is inching towards a 200-day moving average breakout. This could be a big breakout for HDFC Bank because I think it's coming back after almost 5 months or 6 months of price correction. And I think if the stock sustains about this 200 DMA, which is I think 1540 approximately for the stock on the spot levels, we could be looking at a much more bigger uptrending move for HDFC Bank. So right now, in the last 2 months, what we've seen is a wave of short covering, mix of some built up of long positions, but the direction could probably be much more clearer on the upside once it sustains about the 200 DMA, which is at 1540 plus mark. ICICI Bank on the other hand has still been a stock which is underperforming. I think when you look at this relatively with the likes of Axis Bank, which has made a fresh swing high, SBI, which has also done pretty well. I believe ICICI Bank has somewhat been an underperformer even in the last, I think, 45 minutes or so. the stock had corrected from 1150 to now 1120, 1125 approximately. So I would believe that the stock would probably take some bit of more time to break past about 1150 mark. But I think the key to watch out would be HDFC Bank if it closes above 1540 mark.
Okay, point taken. Mahantesh, if you were given incremental money and the option to invest it only in HDFC Bank or Reliance, where would you put the money?
Incidentally, I hold both the stocks, but then at this juncture, if you want to me to choose, Reliance would be the better option. More diversified as a business, more growth avenues for Reliance ahead. Telecom growing quite well. Retail is could bring in a surprise ahead, and Reliance is hungry for acquisitions as well. So, unlike HDFC, who has now a muted growth ahead because there's a lot of competitive intensity building up. The management team post the transition with the merger is still not stabilized. So I would reckon it will take some time for HDFC Bank to really recover. But like my disclaimer is, I hold both the stocks.
Still holding both the stocks. That's the take coming in on from Mahantesh. Just looking at a couple of other buzzers as well. Sun TV definitely is drifting lower today. BHEL as well has eased off about 2.5%. Oro Pharma, like we were just flagging off, that stock as well is a little bit under pressure. A bunch of other names as well which have been in focus. Cochin Shipyard, of course, came out with its numbers. The revenues have shot up about almost 115 odd percent. The net profit is up 6.5 times. So that stock also has been making record highs today, and it's been trading above all the key DMAs. Mahantesh, do you believe some of these defense names could be getting a little frothy? Because, I mean, time again, we debate the same thing, but now the earnings, I guess, are also justifying the move.
I really don't know what valuation principles are behind some of these defense stocks. We do know that defense stocks have large orders to contend with, but that's the nature of the business. What is key for most of these companies is delivery at good profits. And we do know that defense companies and projects by the government that are allotted to defense companies are prone to delays, are prone to cost escalations. And you also have the cost structure within the company being changed primarily due to employee costs coming in and huge pension backlogs. All these things tell me that defense companies, from a really fundamental perspective, are too overvalued unless we have defense companies getting more and more orders outside, let's say, India, which certain defense companies are able to garner, let's say HAL, for example, to some extent, Cochin Shipyard and a few others. But if your order book is primarily going to be, linked to the Indian government's budgets, then it's going to be a little tough.
Right, okay. That's the take coming in on some of those, defense stocks. But Kunal, no abating on the charts, I guess. I mean, a Cochin Shipyard, for instance.
Yeah, I think these stocks have done exceptionally well, and no retracement, no price correction for these stocks. You look at BEL, for example, and HAL, these stocks in the last 2 days have gone through a mild correction. But then when you look at the intensity of uptrend, I think HAL has moved from 4,200 to 5,000 plus mark. You've seen BEL moving, I think, from 235 to 40 levels, I think, last week or so, towards now on the verge of breaking past about 300 levels. So after such a steep rally of 25-30%, if these stocks remain in a range of 5% broadly, that would still be considered as a very healthy sign for the entire sector as such. And even the likes of Cochin Shipyard, GRSE, Mazagon Dock, etc. I think these stocks have done pretty well for themselves over the last few weeks, and looking at the recent consolidation, this could actually be a good buying opportunity on dips for these names.
Okay, point taken. But just flagging out a couple of buzzers, Juniper Hotels after its earnings has actually seen a bit of an up move. Let's pull up that stock. Wasn't a very big, beat or anything, but the stock has been fairly volatile on account of that. And the other one which is coming under pressure in the last few minutes is actually Hindustan Zinc. What a stellar rally Hindustan Zinc has had this year. But today at least it's seeing some amount of profit booking. We'll discuss these stocks at greater length. But before that, let me take it across to Sharad to tell us what the latest cover is on Dalal Street. Sharad, take it away.
Well, yes, in focus is Phenol-X cables, and what we are hearing from dealers is HNI buying is coming across several counters in this space, and the volumes also picked up right from the beginning of the trade. Interestingly, the dealers who are there in the wire industry, they also spoke to us and they stated that the telco cable related area is something which is showing a strong export related orders as well. Now, they are also expecting large orders to come from large conglomerates also, and today itself, interestingly, media reports suggested that Reliance arm would be providing telecom infra solutions in Ghana. Interestingly, 13% of the revenue for Phenol-X cables comes from this segment itself, and also Reliance also gives a lot of orders in the telco segment to HFCL, where it has almost 5% stake, and also a board member is there in the seat. So overall, HNI buying coming across your cable related stocks today.
Okay, thanks so much for that, Sharad. But this hotels and hospital space, the two different sectors, but the affluent India is something which has been doing quite well. Within the hospitality segment, Mahantesh, do you think the trade is over? Because off-late occupancies have drifted lower. Would you book out your profits?
Hospitality industry is very location specific. There are few competitive advantages for certain companies. So unless you have a company which is seeing large traction in terms of capacity expansion, large traction in terms of more properties being managed, it is very difficult to take a call on a company which has status quo in terms of overall properties being managed. But that said, one should remember that there is general buoyancy that we see when it comes to hospitality. Tourism industries now reviving and thriving post-COVID. All said and done, many of the hospitality companies will therefore see better occupancies ahead. But I'm not too sure where the growth will come for many of these companies who don't have more property acquisition or expansions in place.
Okay, let's get in some BTST trades as well then, going on that note. Kunal, what's on your list?
So I'll go with two banking names. IndusInd Bank as a first stock, which I would suggest is a buy. The stock trading at 1460 approximately. Would look out for targets in the range of 1540. Stop loss could be kept at 1440 mark. And PNB is the other stock which is confirming a breakout on the very short-term charts, hourly time frame, specifically a triangular pattern for the stock above 128 mark. So would suggest a buy with a target of 140, stop loss at 125.
Right. Aditya, would you have any buy today, sell tomorrow ideas?
I do have swing trading ideas. I have camps on my list. That looks good. The stock is doing well after a long time, and there's scope for outperformance to continue. So camps is a buy at 3523, and stop loss would be 3400, and target would be 3700 to 23800. And second one on my list is HDFC AMC. AMC space is doing quite well, and the stock was up quite a bit, although we have seen profit booking in this counter along with the index, but still looks good at 3919, and stop loss is 3810, and target would be 4000 to 4100.
Okay, point taken. But Mantesh, coming back to our discussion on financials, public sector banks, do you see a scope of re-rating further for these names? Because they still continue to do quite well in the trading session today.
I think they have ample growth opportunities ahead. Remember that the worsening NPA cycle is kind of over for them. They have weathered the storm. Some of the banks have, public sector banks have good capitalization. And they have good provision coverage ratios as well. Now, the only trigger ahead for growth for them would be how will the credit expand? How will their book overall seem to grow? There is a bit of a problem on the deposit sides for most of them, but credit expansion should potentially happen given that there are a large number of corporate side hunger coming through the capex route for which will get absorbed through the PSU banking route itself. So I would be a little optimistic. Valuations have never been a challenge for most of these public sector banks. They have been beaten down below book values for quite some quite a long time, and therefore now is the time for them to get their valuations right. So if that happens, we should see most of the public sector banks really doing well. So credit expansion aided by valuation multiple expansion should see the banks doing well ahead.
Just to put it in context, we were doing this exercise to get a sense whether the valuations are comfortable or not for the private banking names. And for most of the names, whether it's SBI, BOB, PNB, IOB, pick up any of the names, they are much higher than the 5-year average. For instance, for SBI, it's trading at 1.76 times price to book 1-year forward earnings, while 5-year average is 1.28 times. For smaller banks, the difference is quite stark. So, for instance, Canara Bank is trading at a valuation of 1.19 times, and the 5-year average has been 0.6 only. Even for BOI, it's now 0.78 versus 0.58, and even Indian Bank 1.21 versus 0.55. So a lot of these stocks have run up, and the valuation comfort is lacking. But this is a question we've been posting to a whole host of market experts as well. Let's listen into a slice of the conversation we had with Vikas Khemani earlier. He's talking about his top bets because, of course, he's depending a lot and betting a lot on Atmanirbhar Bharat, and that's one big fund that he's launched. But let's listen into his top overweight ideas.
And I do believe that we are in one of the best wealth creation cycle, and hence that should continue. Any continuity will only further that confidence. PSU banks is something we have been quite positive, and we continue to remain positive. But let's say for the example, oil and marketing company, we have not been at all buying because the governance is not fixed. It's a lot more political. So government interference keeps on happening every time price of oil goes up and down. So we basically prefer where there's a tailwind of the sector, when there's a least government policy interference is happening, is more run by the individual banks, individual organization, then the leadership of those organization has to be good. So I know we've been kind of approaching from that perspective. Pharma, of course, has come out of a very long cycle, and we think that there are many more years to go. So there's no need to kind of panic and kind of get out or continue to remain invested. Chemicals, we did quite contra buying in last 6-8 months when most of the markets were selling off. And we think that, there's a lot more promise ahead. So both these segments, we continue to remain bullish and positive.
Okay, that's the take coming in from Vikas Khemani on where he sees value and opportunity in this market right now. Affle, by the way, that's been the other star performer today. Came out with an excellent set of numbers. That stock, I think, has been sitting on a 4-month high, if I'm not mistaken. The intraday graph will just come off you on your screens. Eased off a little bit with the rest of the market, but at the high point, I think it was scaling higher by about 4% or so. So that's the other one which is looking smart indeed. Still continues to be good for Ashok Leyland. That's the other earnings reaction. Jubilant Foods is holding higher by about 7%. And these stocks haven't quite abated much, unlike the rest of the market. And REC as well is going strong by another 5% dash as we speak right now. Kunal, let's analyze some of these charts if you've taken a look. Ashok Leyland, REC or Affle for that matter.
Yeah, so I think all three of them are looking attractive. And I think specifically out of the three names, REC and Ashok Leyland are the ones which are very intriguing because these stocks have yet again confirmed a breakout for themselves. REC, PFC, both of these stocks, they had a gap resistance. I think, for example, REC closer to 555, 560 mark, where the stock had shown a gap, I think, in the start of the month of May. And then from there, these stocks had corrected back towards 500, sub 500 mark. So it was a sharp 10-15% correction for REC from that gap which was formed. And those gaps have been filled. And this, I believe, is a very strong sign that we are now looking at a fresh wave of momentum coming back into the likes of REC and PFC. The likes of Ashok Leyland, I think, after yesterday's, or rather Friday's price tick, where the stock moved up to, I think, 218, 219 mark and then had gone down towards 210, 208 levels. Today, the stock making a comeback again, breaking past about 225 mark. Again, is an indication that the near-term trend is bullish for Ashok Leyland. The breakout which the stock had shown, I think, closer to 185, 190 mark, almost a month and a half out back, that was a very strong breakout. And now we could be looking at that forming as a major base for Ashok Leyland over the medium term. So I believe intraday dips, corrections closer to 205, 210 mark should be taken as a good buying opportunity.
Okay, time for an 80 Now exclusive then. And, in some relief for thermal power generating companies, CERC will be revising block bid size limit in a bid to ensure operational viability. My colleague Prakash is waiting by with more exclusive details on the same. Prakash, what is it that you're picking up from your sources?
Yes, an important development coming in amid rising power demand in the country, as CERC has directed all power exchanges to allow a block bid size of 400 megawatt in the day-ahead market. A very significant development coming in, especially under given circumstances where power demand is constantly going up. We're given to understand that the CERC has revised block bid size to 400 megawatt from existing 100 megawatt, especially in a case of thermal power generating companies, to enable them to participate in the market. That will help government to ensure sufficient availability of power during current summer season. Remember, thermal power generating companies had approached Ministry of Power requesting them to increase block bid size from existing 100 megawatt to make their operation viable. Thermal power generating companies were of the opinion that they want at least 50% capacity from turndown level to make the operation viable. Subsequently, Ministry of Power had approached CERC in this regard. Now it has been decided to increase block bid size to 400 megawatt, a very significant development coming in. However, the maximum block bid size for sellers other than thermal generating companies and all buyers shall be 100 megawatt, and along with that the maximum number of block bids that the market participant can enter shall be restricted to 50. These all efforts are being made to ensure sufficient availability of power during current summer season, which has already crossed to 36 gigawatt during month of May so far, and expected to cross 250 gigawatt during current summer season.
Well, yes, thanks Prakash for that. Yes, power demand is surging and the government is taking all efforts to make sure that there is no demand-supply mismatch given the peak power demand hitting that 250 to 60 gigawatt mark this summer. But this is a question we've been posing to everyone. Mahantesh, wanted your view on that. What's the best tactical trade ahead of elections or amidst that?
No, it's very difficult to say, but if you notice, past 3 months, the market has been quite sideways between, if I look at Nifty, between 22,000 and 23,000, there was a little, a few points up and few points below that. But having said that, the best tactical play would be that you remain invested and look for opportunities if there is a sudden fall in the market, because the best buying opportunities always come in when there is an event that comes in and makes the market become very nervous. So you should be sitting with cash a little bit on the sidelines right now to help you take away these opportunities that will come, the event-based opportunity, the election event-based opportunity that will come. Even so, while you will continue to have your core portfolio, because what will happen is that if the event is favorable and the markets start rising, your core portfolio will continue to rise with that. And even if you invest with the cash that you have on the sidelines in a rising market, you should be seeing through in terms of your overall investment objective. So now you should be ready to deploy cash 5-10%, whatever comfort you have over the portfolio size, and await this event outcome which is linked to the election results.
Okay, Mahantesh, we'll let you go on that note. Aditya Kanal, we'll see you again with the trading action tomorrow.
If you like this video, then like, share and subscribe to ET Now.